Hi again, this is Rick with AmazingAccuracy.com. It is September 22nd, 2016, currently 8:48 p.m. Chicago time. Alright, what I thought I'd talk about in this video today is the Japanese yen market, the futures, but of course you can always apply it to the yen US dollar Forex pair. It's basically all the same thing, you just invert the direction. If you don't understand what I'm talking about here, the futures market, for example here, where you see prices moving up, is equivalent to the yen to the dollar. That would be the yen would be listed first to the dollar. But as you know, the pair is listed as the dollar slash the yen. So when I'm talking about the yen moving up in futures, I would be talking about the yen moving down in the USD JPY Forex pair. So you just kind of have to invert or flip upside down everything that I say for the futures. But this is the Japanese futures, okay? So for you Forex traders, just remember to invert whatever I say for the Forex. All right. The yen futures has been climbing for several months now, ever since it put in that bottom listed here of June of last year, 2015. And ever since then, it has pretty much moved all the way up until it topped just this last June of 2016. So that was an exactly 1 year bullish move, 12 months of overall bullishness. Now, I've applied 180 degree time price squares here, and you'll notice that in June it did hit resistance, and then again as it tried to go higher in August, in the middle of this square it again hit resistance and again had moved down. And all this is also occurring in this green zone, which is the overbought zone, which normally you'd see prices be repelled back down again from the overbought zone, as it did here in August. But then this month, September, it is making another attempt. It's moved back into that area there. And so the question is, might we break out and move to a new overbought zone? I don't think so. I believe that we need something a little more substantial than this August pullback here, and hitting this double top here in the middle of the square to me is pretty significant. Besides, I'm going to show you some other things as well. For example, you'll notice this seasonal data report that I have here for the monthly yen, and it indicates here that historically, it's not necessarily going to happen every single year, but historically, the months following September have been historically bearish. And so you can see that it's turned into a red zone here following the August-September time period that you see that is mildly bullish. And when I say mildly, because they're in the 50s, you see the 50 percentile, 59, 56, so just mildly bullish, which, you know, we've seen that. We've seen that right here, mildly bullish. And now we're in this time zone here where it looks like we're heading into a bearish time period historically, seasonally. And here you can see they're listed in the 60s, so it's even more significant. And you can also see this really rich red color here with a 74, showing an extremely high probability of December even putting in a new monthly low, which would mean a bar that's lower than its previous month. So this is an overall bearish indication here for the next few months to come following this month, September. So this is one of the alerts here to me that I may want to start looking at the yen starting to move downwards. And also, again, because it's been hitting resistance here mid-square, which often turns occur at the beginning, end of squares, and mid-square. And it's in the overbought zone, which is also an indication that it needs to pull back some, collect itself before it makes another run to a new higher overbought zone. Now I'm going to move over to the weekly time frame, and you can see here that it has its own zones, overbought and oversold, and we can see that it went into the overbought after being oversold. It went into overbought, and it pulled back down again. Now it didn't go down into the oversold, so there was still some strength left here. It's back into the overbought zone again, and it's still waging somewhat of a battle. As you can see, this week's price bar is not decisively bullish as it's pulled back from the highs here. You can see if you recognize these Japanese candlesticks. Also, I have several indications here. You can see a whole list of dates here pointing to the week of September 16th, 23rd, and 30th. So in this time area, because this week is the week of the 23rd, referring, of course, to the end of the week, which is Friday's date. So we also see this red diamond here, which is a weekly F-date indication. Now, the previous one was right here, and you can see that we had a weekly swing bottom. So while prices were moving down and it moved into this red diamond area, we were alerted that we need to start looking for prices to start moving up, which it did, in fact. And now with this new diamond here, we want to start looking for prices to then move down again. Okay, so that's another indication here for me anyway that we should be looking for prices to start pulling back in the yen market. Now this is the weekly time frame. Let's now go to the daily. Now here's the daily, and the bars you can see are much smaller because I've packed in more time to show in this chart. And right now, so far, what we've seen here is we've had this little daily swing bottom. Then it gave another higher daily swing bottom, also in the oversold zone that you see here. And it happened in the next F date. These are daily F dates here. And then now we're expecting one for the 9/26 time period. And tomorrow will be one day within that, which is acceptable, which would be 9/23. And what's interesting is that, again, utilizing the seasonal data report for daily prices, I notice here that seasonally, September 23rd often makes a new high, but then goes bearish for the next 2-3 days. And that's what this blue here indicates is a new high, whereas a red would be new low. And we see we have a new high for the 22nd, but seasonally the 23rd has been providing new highs. And because the 22nd is not inside this F date, because this F date's the 26th, and we need at least to be within one day, so that would be like tomorrow's the 23rd, Friday, which is one trading day of this date, which is acceptable because it's plus or minus one trading day. I would really like to see prices make that higher high tomorrow, Friday, and then go down for the day, which would be a beauty because it would really match this scenario here of making a new higher high, but being overall a bearish price bar. That would be nice. Now, the 9/22 bar did that. It made a higher high and then turned into a bearish bar, which is not what we see here. So it's interesting that we already have one, but 1 day early. But my thing is that the indications are strong that we'll get a turn for the 926 time period within a day. I'd like that to be a top, because that would be coming out of the overbought zone here, and for prices then to start moving lower, and that way we can start working on this bar here becoming a weekly swing top for the weekly forecast that you see here. So I like to see everything aligning up before I put my money on the table. And so right now, being on the sideline, I want to see that we have something going on here for this F date that corresponds with this weekly expectation. And then for the long term, it looks like overall we should see some the trend changing for the next 3 to 4 months, as you can see indicated here. And that's pretty much what I see going on with the Japanese yen. And if you haven't done so already, please subscribe so that you'll be informed in a timely manner of my next video. I appreciate you watching. Come visit my website at amazingaccuracy.com, and I'll see you in the next video.